Hello, everyone. Hope you all are doing great out there. I'll be with you shortly. If you could, just please let me know how the audio is coming in, and I'll see you guys in about 30 seconds. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vera. Thank you all for being here, whether it's late in the evening for you, early in the morning, or just getting your day started. Thank you all for being here and hope everyone is doing well. Quick roll call out there. Let me see. Hetman, super guest. Thank you. Yes, we're going to be having Michael Wittmeyer, excuse me. He will be on later, and we'll be talking with him. He's the CEO of JM Bullion, and I'm going to be looking forward to that as well. So we do look forward to having him on. Great guest for sure. VK Travelog, how you doing? James Rickard, Jay Adams, how you doing? Joanna, Jack Parsons, Aaron. A lot of new names out here. Glad you all could make it here and welcome aboard. So with that, if you are new to this channel or you haven't already done so, please do subscribe. Hit the bell to be notified on new updates and give us a thumbs up. If you like what we do, we really do appreciate your support. And as always, you can find us on social media, silverbullion.com.sg, where we do specialize in systemic wealth protection. If you understand what's going on all around you right now, systemic wealth protection is really something that should be looking at and something we should be understanding right now. Silver Bullion SG is our handle on Facebook, Twitter, Silver Bullion PL. Audio versions can be found on bit.ly, bit.ly, SBTV iTunes, SBTV Spotify, and do join. Every week I say this, do join our Crisis Tracker group, t.me/Crisis Tracker. This is where we put a lot of great info pretty much daily as it pertains to gold, silver, finance, economics. And this is something that it is good to put in your arsenal, in your quiver. It's always good things to add to your day and understand what else is going on in the world. So again, having said that, welcome aboard. Again, we've seen a lot of new people here, so we thank you for that. The Mick, how you doing? Aloha. Thomas Hubbs, Paul N, Gary Downs, a lot of new names. Seymour Rivers, 2-time ebook winner. He's going to have to give you a medal for that. Will it be 3? Who knows? Who knows? But I'll let you know who our upcoming guest is, and the ebook is going to be linked to him. Our upcoming guest, Mr. G. Edward Griffin, author of the bestseller The Creature from Jekyll Island, a second look at the Federal Reserve. G. Edward Griffin, again, writer and documentary, also film producer, and author of the bestseller Creature from Jekyll Island, second look at the Federal Reserve. You know, G. Edward Griffin is probably the one person most responsible for awakening millions upon millions to just exactly what the Federal Reserve is. I know he woke me up to what the Federal Reserve was. Like many, I had no idea really what it was. And when I kind of sort of had an idea what it was, I thought it was a government entity, only to find out it's not. So looking forward to that interview with G. Edward Griffin. Okay, a few more names on roll call. New Mexico Stacker, thank you. Fib 161835 thank you, appreciate that. Carrie Ellen Wilder, thank you. Sumari, new name, welcome aboard. Nicholas Nasty, another ebook winner. How you doing, Nick? Dan Warsaw, Manuel de Jesus, thank you. Appreciate you following the channel. It's really all about you guys. It's not about us. It's all about you. So appreciate you being here. Thomas Hobbs, Steve Woods, Truth Teller. Good to see you again. Okay, so let's see. The Fed should be in Guantanamo Bay. Okay, that's a good one. So again, that'll be our upcoming guest, and what we're going to be doing is we're going to be giving away his ebook, G. Edward Griffin's ebook, The Creature from Jekyll Island. Um, this will be the prize or a thank you for our He Said What game. And in this book, it's pretty interesting. I have had time to read through some of it. It's a pretty large book. I think it's some 600-700 pages, so it's pretty big, but a lot of great info in there. It's hard to put down sometimes, but in it, where does money come from? Where does it go? Who makes it? The money magician's secrets are unveiled, and it really is. So we get a close look at their mirrors and smoke machines, their pulleys, cogs, and wheels that create the grand illusion called money. So we're going to be giving this away as our ebook. Thank you. House rules: download the Kindle app from your phone or tablet's app store. It's free to download. Be the first to answer correctly in this live stream before the timer runs out. I think you'll have somewhere around a minute 30. U.S. winners will be given the link to the ebook. Winners outside the U.S. will be offered an alternative prize at our discretion. Again, that's because for some reason Amazon does not let us pass Kindle. They don't let us pass Kindle books or ebooks as gifts outside of the U.S. So it's not us, it's Amazon. So any of you out there know Jeff Bezos, give him a phone call, help us out here. We'd like to be able to give it to everyone. And you'll need to provide us an email during this live stream. And what we'll do is we will mute your name, and that way you can go ahead and pass us your email address, and only we will see it, and then we can go ahead and contact you and give you your ebook thank you gift. Okay, so having said that, everyone ready? It's a good book. I'm telling you, it's a really, really good book, so you will definitely want to win this one. So the question is going to come from last week's Peter Schiff interview. In the recent Peter Schiff interview last week, Peter said the U.S. does the majority of what? But economic growth is driven by production. Okay, so first one who can answer this correctly before the time runs out in this live stream will be given that ebook as a thank you gift. So Peter Schiff said the U.S. does the majority of blank, but economic growth is driven by production. It's driven by production. But the U.S. does more of something else. So let's see if any of you guys can answer it in the time allotted. Okay, all right. We got a winner. Looks like we got a winner again, and he's challenging Seymour Rivers. Let me see where'd it go. I believe it was Nicholas Nasty who got it. Let me see if I can find it again. Consumption. Yep, Seymour Rivers Printing, Meowster Consumption, Nicholas Nasty Consumption. So let me scroll through this and see if there was someone else who did say it ahead of you. I don't think there was. So it looks like we have two-time winners, Nicholas Nasty and again Seymour Rivers. You guys are neck and neck. So yes, it is Nicholas Nasty. And just to prove it, we'll go ahead and play the clip from Peter Schiff.
Americans think they're rich as they watch asset prices go up, as they keep borrowing stuff that they didn't produce, and we go deeper and deeper into debt. But this is setting us up for a major crash. The dollar is going to collapse, and then we're not going to be able to continue to import the stuff that everybody else makes by just printing money. And people think that we are doing the world a favor, that somehow we're the engine of growth because we're doing the consumption. They actually have it backwards. We're the caboose of growth because we're doing the consumption. What drives the economic growth train is production, right? What really makes a consumer is their ability to be a producer. You have to produce first, and then you consume second. We got the cart before the horse.
We got the cart before the horse. Yes, we have to produce. Instead, we're consuming. Seymour, got a message for you from Nicholas Nasty. He's coming for you. So you two guys got a little bit of a duel going on there. It should be pretty interesting to see how this all pans out. But for the rest of you, no worries. We are looking for more great comments. And if you didn't win, no worries. We'll be looking for some great comments and participation, and we'll be giving away perhaps up to 5 more of Aon Schmidt's ebook, Build Your Own Bank. Again, this is an incredible book. The more you get into it, the more you really see things a lot more clearly, and the things that you can do, because mainly because there are going to be opportunities ahead. I mean, a lot of times, you know, we we can fall into a little bit of a gloom and doom corner, but and we forget the opportunities that are going to be out there. I mean, there is a lot of positive things that we can look forward to. We just need to position ourselves right. So we got a lot of reason to be smiling still. So let's head on over to our website, silverbullion.com.sg. This is where you can contact us. You can open up an account. You can right now transfer in precious metals. We have 75% off if you want to transfer in your metals to our vault and put your metals into Singapore's jurisdiction, which is a favorable jurisdiction, probably I would say either number one or number two as far as better jurisdictions in the world. So taking a look at the price, here we go. Silver 23.01, hanging in there, hanging in there. Gold 18.61. Yeah, both metals had a pretty rough week last week. Silver especially was bouncing around that 69, 70, 71 ratio, and all of a sudden it's back up into the 80 range, I believe. Yes, 80.9. So silver, if you're playing the ratio, it's still a good time to get silver. And again, gold is just about at its all-time highs, but silver is about half of its all-time highs, half off its all-time highs. So there's still quite a room to go for silver. And again, once here, you can click on this here to download our investor kit. And don't forget to sign up for storage. Signing up for storage is free, doesn't cost anything to maintain your account, and you'll have it set when the time comes, if the time comes that you do decide to store some metals overseas. So again, and gold silver ratio, we're looking at about 80. It is a good time to be buying silver. Let's take a look at Twitter, see what's going on in the news. I bookmarked a few items. Mainly this comes off our Telegram group. So again, do join that Telegram group. Jim Bianco, a little bit of humor here. This is live footage of Jerome Powell carrying the market. This is the definition of QE. See, Jerome Powell is in the cowboy hat and he loads up the banks into the car, and he's going to help transport the banks and carry the cars and give them a free ride. And I don't know, maybe that's Steve Mnuchin in the back, the little dog there, who knows. But the banks are getting a free ride and a free lunch. So Jim Bianco, a little bit of humor there. Let's either end the night with a little bit of laughter, or let's start the day with a little bit of humor. But tell you what, it is a good example of what QE is, where the big banks get the free ride. So Federal Reserve, watch for them driving a, I don't think this is a Cadillac, but look for a car without a roof. That just might be Jerome Powell in it. So there you go. People are real, fiat is not. So this was a pretty interesting story. We'll take a quick look at it again, and we're going to have Bullion CEO coming up in about 15 minutes, so hang with us. Fed Evans, more fiscal relief needed to limit further damage to households and businesses. Chicago Fed President Charles Evans warned, we are taking a very serious and unnecessary risk if we do not extend Federal Reserve assistance to out-of-work households. He added the potential hole in the aggregate demand may be large, and in my view, more fiscal relief is needed in order to limit further damage to households and businesses, especially those in vulnerable communities. So essentially what you got here is you have the Fed asking the government for help to enable households to get more relief. So it's almost as if the Fed is really now turning tables around a little bit and pushing the government to get things done and get things done in a timely manner. So that's pretty interesting there. It's a good article. Jeff Goodluck, he tweets out, Elon Musk, Joe Rogan, Ben Shapiro, to name just a few, are leaving California to escape incompetent governance. The response from Sacramento. Wealth and massive income tax increases on job creators, aka the wealthy. Should I align with three smart guys or Sacramento? So Jeff Goodluck, and he later tweeted out, he, I guess it is on his mind because of the taxes. And again, if the wealthy do leave to another state, then that leaves the middle class again holding the bag to try and pay off these new taxes, these wealth taxes that states are looking at. Peter Schiff, I volunteer my ex-wife. Okay, this can't be good. What did he volunteer his ex-wife for? Well, article from Zero Hedge. Top NASA official unveils 28 billion plan to land the first woman on the moon. All right. Okay, that's what Peter Schiff is volunteering his ex-wife for. Funny things going on in Twitter. Okay, taxes are likely to go up for the wealthy in these 9 states. We'll take a quick look at which 9 states they're talking about. The key points in this article from CNBC: legislators in New York, California, Massachusetts, and Maryland and other states have renewed their efforts to hike taxes on high earners. States are facing multi-billion-dollar revenue shortfalls due to the cost of coronavirus pandemic and lost revenue from shuttered businesses. And lawmakers argue that the wealthy who have largely escaped the economic hardship of the pandemic should pay more of the cost and more of the cost for those who have suffered most. So let me just skip down and take a quick peek at who these 9 states are. Along with New York, California, Illinois, Massachusetts, Maryland, Wisconsin, Hawaii, Oklahoma, Vermont have proposed various forms of tax increases on the high earners, according to the National Conference of State Legislatures. Those states account for more than a third of the U.S. population and nearly half of the nation's millionaires, according to population data and wealth surveys. So if you're in one of these 9 states, New York, California, Illinois, Massachusetts, Maryland, Wisconsin, Hawaii, Oklahoma, Vermont, you might want to give Jeff Goodluck a call and see what's on his mind and in his plans as far as looking for more tax friendly places. And this is one of the reasons why, again, people do move their metals offshore into a more jurisdictional friendly place for them. States are going to reach and overreach. That's without a doubt. Just make sure you protect your wealth and prepare for systemic wealth crisis. These are the 2 key points that we need to keep in mind. It's not just the Fed's balance sheet rising. We're also seeing homes. The household balance sheet is rising in the U.S. as well. This is something we're going to have to keep an eye on. Go long on pandering and printing. This is about, they're talking once again about relieving the student debt. It's there's it goes both ways. Some people are for it, some people are against it, but it really comes down to how is it going to be paid. So once again, this is starting to get fired up again. So go long on pandering, especially during election time, and printing, where you already know Federal Reserve is just going to keep on printing until the machine starts smoking and the bearings fall off. Inflation is coming. Some guy posted where he just bought some personal items, and it was already over $11 just for some mouthwash and deodorant. And I think that is a bit of inflation, because even here in Singapore, if you factor in the exchange rate, this is about what I would pay for these 2 items here in Singapore. So, yeah, this tells me inflation is definitely there. And he was just at a Walmart in Leesburg, Florida. So it wasn't necessarily in a very wealthy Walmart neighborhood, if you could say that. So already 1186 just for these 2 items. That's pretty amazing there. So let me get back here. So again, a lot of things going on. But I do want to recap last week before we head on to the interview. I just want to recap with one thing on our guest reflect portion. So after speaking with Peter Schiff, I want to go back to revisit something that he said about Greenspan, Powell, and gold.
When Greenspan was Fed chairman and gold was trading at about $350 an ounce. Right now we're, just under 2,000, right? 1950.
Yeah.
But he used to talk about $300 and $400 gold. And what he used to say publicly was that if gold price went down to 300, he knew that he was too tight. And if gold got up towards 400, he knew he was too loose. And so he would use the price of gold as a signal, a market signal, as to whether or not he had the right monetary policy. So if you saw the price of gold going up too much, hey, I'm creating too much inflation, I better raise rates, tighten policy. And if gold went down, oh, we're too tight, right? So he was looking at gold. But ever since Greenspan left, nobody gives a damn about the price of gold. And so I don't think Powell even cares or even appreciates the significance of $2,000 gold. And I don't think he's worried about $3,000 gold or $4,000 gold. He should be. I think it.
Okay, so from Peter Schiff, maybe Powell is not looking at the price of gold. If you were looking at the price of gold, yeah, gold is surely screaming at him right now. Couple comments I want to take a look at. Let me see where to go. One Royal Wolf. I look at the cost of a postage stamp in Australia 10 years ago. The stamp was 50 cents. Today it's $1.50. I think that's a good gauge of inflation. Yeah, 3 times the amount. That's a good gauge of inflation right there. Stamps are supposed to be they were like currency back in the day. So yeah, you gotta kind of take a step back and think, what's going on even with that 3 times the amount. Let's see. RR increasing stagflation due to the massive distortions in price discovery the Fed has created by pumping excuse me so much fiat money into the system. Absolutely. And again, we may not be seeing the inflation right now because I think generally it's in the markets. That's where it's at. It may not be entirely coming onto Main Street yet, but it's surely in Wall Street and in the markets. We're seeing a lot of valuations really, really overvalued. How else can you say it? It's really overvalued right now. The market is anyway. So anyway, let me take a look at a few more comments and then we'll go ahead and get going with the JM Bullion interview. I did have a pre-interview and it's pretty interesting. So I hope it can carry forward into the interview ahead. But so higher gold prices indicate inflation and the need to raise interest rates. Higher interest rates puts the brakes on borrowing and spending. Lower interest rates typically bring higher inflation. In that lower interest rates make it easier to borrow and spend, and then you get economies getting hot, and then you have to go back and raise interest rates to cool it off a bit to try and slow down that borrowing and spending. So, as we talked about last week, the Fed it it cannot not intervene. It with the dual mandate it has, maximum exposure and price stability. It has to intervene. It will always intervene, and that really takes away from the spirit of capitalism and free markets. It really takes away from that. So anyway, with all of these things said, I just want to touch on one more thing though. It- Gold is, yes, telling us we have inflation and it is at all-time highs. So some people say we see it and others say we don't. And as I said, a lot of people do think it's already there in the markets. So what we'll do is maybe we'll go ahead and we will see if we can get Michael Wittmeyer on for the interview. We'll go ahead and if he's watching, he has about a minute or so with the delays, and then we'll go ahead and give him a call and see if he's all set. So if you do have questions for him, it may be a good time. We'll throw in some comments to Michael, and I guess having said that, we'll get going. Let's go ahead and give him a call. Let me close a few windows here. Hang on. Um, Hang on. Just give me a couple seconds here. So we'll go ahead and we'll give Michael a call. All right. Oh, okay, let me try again, might be a little bit of a technical glitch. Let me try one more time. We'll go ahead and get Michael on. Hey, there he is. Michael, how you doing?
Hey, good. How are you?
I'm doing great. Glad you could be here. Michael Wittmeyer, CEO of JM Bullion. How's things over in your neck of the woods? Everything okay with the
Yeah,
virus? Still moving on?
yeah. Thanks for having me. Things are starting to normalize a bit here. We're starting to get a few people back to the office, but for the most part, there's still a lot of people kind of sheltering in place. But I am seeing some more traffic on the roads, and restaurants are starting to open up, so beginning to normalize.
Okay, that's a good thing. That's a good thing. Okay, so let's let's jump into it. Can you tell us a
Sure.
little bit about your background and what led you to start JM Bullion and this Forbes 500 or Inc. 500 recognition that JM Bullion has received?
Yeah, so I started JM about 9 years ago now. My background was always in internet marketing, actually since high school. And my first business, I started a network of affiliate websites where I would create informational websites that I would get ranked in Google for search phrases like where to play poker or how to play poker online. That was kind of the first space I was interested in. I was always a poker player. So when people went to Google and searched that, they would find my site, and then I would refer them on to where they could actually play, and then I would get paid a commission by um, those companies. So I got gold and silver because someone I knew in that space, after working for help set up an affiliate program, they wanted to be able to use guys with digital marketing expertise to help drive leads to their site. So I signed up under that. I thought this was a really interesting market. I built a few websites in the space along with a partner. Started to learn about precious metals, started to drive some traffic to that retailer. We were getting paid commissions by that company, and things were going pretty well. About probably 8 or 9 months into that, that company actually ended that relationship.
Mm.
And I'm not really sure why, but we were sort of left in a position where we had developed all these websites in precious metals and we had nothing to really do with them. So we kind of looked around the market and we felt like there was sort of a gap in terms of a really modern, clean user experience, more of an Amazon.com for precious metals. And we said, hey, why don't we try to do this and see what we can make of it? So that was November 2011. We started JM, and it's been quite a ride to this point, but I've really enjoyed it. Got to learn a lot about the market and build a company that we're pretty proud of.
Okay, a couple interesting things you said there. One, the affiliate for some poker sites. So I probably helped you out in the very beginning because I did frequent those quite a bit way back then. So if anybody knew the
Yeah,
username Guava Juice on Party Poker, that was me. So and but the
we
other
might have crossed paths.
okay, so you're the guy who took my money, huh? But but the other thing, you mentioned you started up in 2011, and 2011 was pretty much the all time highs for gold and silver. So you opened up in 2011, and basically it your first 1, 2, 3, 4 years were pretty rough because we saw gold and silver go down. How did how was it for you, and how did you manage to make it through?
Yeah, so a couple pieces of that. We hedge all of our inventory using futures contracts, and we've done that pretty much since the start. So we always took the position that, we're not in this business to speculate on whether metals go up or down. We are an online retailer that's providing, individual investors with the service they want. So we've always made our money off of premium spreads and not off of gold or silver's directional moves. So the fact that metals went down the first few years really didn't impact us from a business perspective. How it did impact us, though, is when metals move, when there's volatility, it spurs either demand and or supply from the customer base. So as an example, like in April 2013, gold and silver took a pretty big haircut over a few days, maybe about a week. And we had very, very big sales days because our customer base was sort of rushing in to buy the dip and felt like that was a good price to get in. So there were a few periods like that the first few years where we had some demand surges. And because we were hedging all of the metal inventory we had, we were never taking a hit on the actual price movements in metal.
Okay. Okay. So let me wait, I need to ask you also about the you did receive an award from Inc. 500 or Forbes 500, and it was a pretty significant award. Could you tell us about that?
Sure. Yeah. So I think that was in 2016. We were on the Inc. 500 list. We were, I believe, ranked 41st, which means that of all the privately held companies in the United States, we had the 41st fastest growth rate that year. And that came from, we started JM obviously at zero. And I think in 2012, we had something like 10 million in revenues. And by 2015, we were in the hundreds of millions. And, that percent growth rate was enough to get us, pretty high up on that list. So that was an achievement that the company was pretty proud of.
Okay. Well, congratulations for that. And I just
Thank
want
you.
to thank you. Good job there. But I just want to ask this question to start off, though. It's a question people always have, and they ask when they look at things like the ratio, should they be buying gold or should they be buying silver right now? What's your opinion on that?
Yeah, so I heard you talking earlier about the gold silver ratio, and it's still pretty favorable for silver, historically at least. Um, our view on this, really our philosophy as a company is we try to encourage our customers to educate themselves on markets, learn about what investments might work for them, and we're happy to help them do that. We really try to avoid telling people, hey, you need to buy this or you need to buy that, because we feel it's a very personal decision that, based on the rest of your portfolio and where you are in your life, there's a lot of variables involved, and we want people to make the right decision for them. I personally think that silver is interesting right now, primarily due to the ratio you mentioned. And, earlier you said, gold's still fairly close to an all-time high, which is true, and silver's still got quite a ways to run. So I think silver, could have some legs. And what I like about silver, there tends to be a bit more product variety and sort of
Mm.
unique, cool products and, custom series and stuff like that. So investors who, don't just want to stack the same 100 silver bars, in a row, they can tend to get a little more variety on the silver side.
Yeah, that is true, though. A lot more variety there. Uh, Price volatility, we're all seeing it right now. What do you think is happening with the spot prices of gold and silver? I mean, some people say it's a liquidity credit issue that's still there, so there's a sell-off still happening with gold and silver. Other people think this is just a normal pullback where, there's some consolidation happening. Excuse me. But what's your opinion on price volatility? Just an opinion.
Yeah. Markets are complex. There's a lot of different variables that could lead to what we're seeing. So it's really hard to point the finger at a specific thing. I think a lot of this is just, there had been very, very little volatility for years. I mean, really since the Trump election, stocks have gone straight up and metals really haven't done much of anything. And off the back of this pandemic, where we finally saw, this explosion in volatility and uncertainty and people, reallocating their portfolios, I think it kind of shook loose a lot of volatility that had sort of laid dormant for a while. So I wouldn't really point to any specific cause about, hey, why are metals down, the last few days? Dollar strength is what a lot of the headlines say, but
Yeah.
There's so many moving pieces. So I kind of hesitate to say, hey, this is why that's happening.
Yeah. Okay. Got a comment here. Let's see. Gary Down says JM bought over Provident a couple years ago. How are things turning out since then?
Yeah, so we bought Provident. Actually, I think it was last summer, just over a year ago now.
Mm.
They had kind of fallen into a difficult situation, and we were able to acquire the company and ensure the brand continued on. We offer right now a fairly similar set of products on there, but we're actually in the midst of reviving some of the old custom product series they used to offer that sort of fell by the wayside, and they actually never completed them. So one item that'll actually be coming out in the next few months is the sixth release in the Egyptian God series, which was a very popular 2-ounce ultra high relief series that Provident put out back in the day, and it was a really good seller, and customers loved it. Very unique with the ultra high relief on the round. So we've been able to find a supplier who can make actually I think a better quality product, and that's one that'll be coming out soon. So Provident's been good for us. We were just happy that we were able to continue on a brand that had been around for 10 years, and a lot of the customers really love that brand. So um, it's been a good ad for us, and we're hoping we'll be able to kind of put some really cool items out in the next few months for that customer base.
Yeah, I'm sure people are going to be looking forward to that. I know Provident had some pretty cool designs before.
Yeah.
Um, moving on, besides the price volatility in the news, again, we're hearing things about bankers and traders being busted for influencing precious metals markets or prices. When you heard
Mhm.
of this, what were your initial thoughts? And for JP Morgan, is the 1 billion fine fair?
So, I've been following this one for a while. There's been a lot of, chatter on this price spoofing that
Yeah.
is what they were doing, and they've now, essentially proven that. Um, is it fair? I don't know. I don't think it's necessarily punitive. That's about 2 weeks worth of profit for those guys. So, sure, that stings. It's obviously $1 billion, but I don't know that it's necessarily going to cause banks to make different decisions in the future. I think one thing that's a little different with this one is some of those guys are actually going to face criminal charges individually. So that's a bit more of a you know that will actually scare people. I don't think financial penalties are going to scare a bank though, especially of that size.
Yeah. Okay. Okay. So let's Okay. Next question we got for you: Federal Reserve, uh, and other central banks around the world, they're talking a lot more louder and a lot more frequently about central bank digital currencies or CBDCs. In your opinion, do you think gold will have a role to play with the upcoming central bank digital currencies?
So I think that would be awesome, and I think that would be prudent and kind of put some guardrails on the road, right? If it's
Yeah.
tied to gold in some fashion, they can't digitally create new gold out of thin air. That being said, my opinion is the reason they're doing that is to, exert further control over the monetary supply. And I think, they like that it's pegged to nothing and they can set, whatever monetary supply they like and reallocate funds and, print money and put it in consumers' pockets or in banks' pockets. So my opinion is I would be surprised if they tie it to gold in any way.
Yeah, it's a good point. It was tied to gold, and what happens is politicians basically have to be responsible when they do have that tie in, that link to gold, and it's not exactly something that a politician might like. I mean, I think they like the freedom of just being
Exactly.
able to, yeah, exactly, to
Yep.
print more money when they need. Um, Moving over to things like gold and silver, a little bit closer to gold and silver. So we saw the pandemic come in, and we saw gold and silver prices rise. So I just wanted to ask you, are you seeing more new customers? How is the business since then? And with the people buying, is it more of your new customer buying, or is it existing customers that are buying?
Yeah. So the pandemic was really obviously an unprecedented event, particularly in our space, caused explosive demand, just something we would have never ever foreseen or projected in our wildest, hey, what is the biggest number we could ever do? We went
Yeah.
about triple that. Um, and that brought a lot of challenges. So, in terms of if it's new or existing customers, it's definitely a mix. We're seeing, we have about 1 million customers going into this period, and we're seeing a lot of them making, you know, more frequent purchases and larger purchases than they had historically.
Yeah.
But there's also a huge set of new investors. We'll add between probably close to 300,000 customers this year, new customers. That's a huge number for us, and they're spending significantly more
Yeah.
than new customers did in the past. So I think there's a new set of investors who have sort of woken up to the idea of having physical metals in their portfolio this year. And it'll be interesting to see, you know, does that group stick around post pandemic? And if so, I think that bodes very well for gold going forward, gold and silver.
Okay. Let me go through these questions here. Um, Another question that we get a lot from our viewers, they leave this in the comment sections where they have concerns. Should they be getting pre 33 gold, or is it okay to just get straight up gold bullion? Obviously, it's because confiscation is on their mind, and they seem to be thinking they're at a fork in the road. Which one should I get? Should I get one or should I get the other? What's your opinion on this?
So, in terms of the risk of bullion being confiscated, I think it's extremely low in the at least in the current environment. And also, I think if we got to a point where the government actually was coming after, private citizens' physical gold, I don't necessarily think nowadays they're going to discern between, pre-33 or modern bullion. So my opinion on that is I wouldn't lose any sleep over that if I was an individual investor, but I also wouldn't be targeting pre-33 just with the assumption that, hey, if this happens, I'm going to be okay because I had pre-33.
Okay, okay. So yeah, I mean that is something that we hear it all the time. People are concerned. Should they get
Yeah,
33
us too.
or yeah? Okay, so I guess
Mhm.
it's all over the world, and we get it here in Singapore as
Yeah,
well.
it's a common question. Yeah.
Okay. Uh, your expectations of gold and silver, the price movement for the rest of 2020, and I kind of want to split this into two parts. We have pre-election, so I'm looking at what might be the expectations of price movement pre-November, and then I'm kind of wondering what the price expectations may be post-November or post-election. Do you think there's going to be a difference between riding up to November and after November, or is really is there not going to be a difference at all?
Uh, It's a tough one, right? I mean, this year has taught me not to make predictions because this year has proven, crazy things can happen. My personal belief is it wouldn't surprise me if we saw volatility quiet down a little bit the next few weeks leading up to the election, because we're kind of focusing on this. There's this inflection point coming where we're either going to have one outcome or the other, and there's going to be sort of a waterfall of events that will come from that. And I think, another thing that could play into volatility occurring in November would be, if we have some sort of contested election in that,
Yeah.
you read a lot about Republicans say they're going to vote in person, and Democrats largely say they're going to vote via mail-in ballots. So, we could look like we have a huge Trump lead November 3rd, and then the Democrats are screaming, "Hey, wait, there's all these mail-in ballots coming,"
Yeah.
and that could lead to a really volatile environment, particularly for metals, where that sort of uncertainty and even anxiety really drives demand for this product. Um, and nowadays, like, physical demand has gotten so big this year that I actually think it's material in terms of the spot price. I probably
Yeah.
wouldn't have said that a year or two ago. It was largely futures driven trading that was moving
Yeah.
gold and silver. But I think physical flows, particularly even GLD, the ETF, are actually starting to really influence the market. So, if we see huge, even just retail influx of demand, I think that could lead to increases in precious metals prices.
Yeah, that's a good point because even let's say after the election is done, there still may be a very very gray area as to the results. And
Yeah.
yeah, I'd imagine we would see a lot of people moving into precious metals then, as
Yeah.
being that we're losing quite a bit of confidence. Had a question I wanna bring up. Uh, Manuel de Jesus, he's talking about actually food and food prices going up. Are you seeing that in your area as well?
Yeah, definitely. And all you hear about is there's no inflation, nothing
Mm.
to worry about. But in the real world, I think that's not the case at all. You see it in grocery stores. You see it. Things like college tuition have just gotten absolutely out of control in the United States. Healthcare. So I think it's really deceptive to pick this basket of very specific things. Here's how we're going to measure inflation, and then say, oh, there is none. So the Fed can keep rates at zero forever. So yeah, we see it here in the States, and I think that it's sort of a hidden tax. People don't really see it unless they're looking for it. It's not like an increased withholding on your paycheck, but in effect, it's the same thing.
Okay. Okay. Um, Premiums. There were some guys asking about premiums. How are premiums at JM Bullion? I'm assuming, like many dealers, your premiums they have to be adjusted because of what happened, the variables of supply, transportation, production, etc. What do you see as far as premiums through the rest of 2020?
Yeah. So premium wise, kind of the landscape this year. This is something we've been asked about a lot.
Mm.
Leading into March, there had kind of been a few very quiet years in our market. pretty much since the Trump election, the physical metal demand had actually been down pretty significantly versus prior years. And in addition to that, we lost two mints here in the United States. We lost Metal due to the investigation they went through, and they're not really producing anything anymore. We also lost Republic Metals due to bankruptcy. So two of the really big, producers of small format golden bar or gold and silver bars and rounds had sort of vanished in the years leading up to this. So going into March, we had very reduced production, and then all of a sudden we had this demand spike that nobody ever could have imagined before. So that by itself would have resulted in premium skyrocketing, just because when we go to buy from our suppliers, if demand is through the roof, they're of course going to increase their premiums, because when they go to source from refineries, they're going to be paying more for metal as well. What really made that even worse, though, in March was, other than maybe 9/11, I can't remember a time where, planes weren't flying and trucks weren't driving. Logistics became a nightmare. So a lot of the metal existed. It was just in the wrong place, and you couldn't move it for a long time. And then, by the time you get it to the mint, they had to work through it, and then you had to move it to the DC. So it was a mix of, the extreme demand explosion, supply capacity not being there due to the quiet years prior, and then, just logistical challenges of moving the stuff around. So you saw huge premium spikes in late March, early April, highest I've ever seen in this industry. They started to come off May, June. They were starting to come off a decent clip. Supply was catching up. The supply chain was normalizing. Demand had come off a little bit. And then July, August, when, gold took a run at and surpassed 2000, and, there was kind of I don't know if I'd call it a second wave, but there were more COVID headlines kind of reoccurring. It happened again. So as soon as, premiums are starting to normalize a bit, they just went kind of right back up to where they were. Now that's starting to normalize, and supply has really, really ramped up. So I think absent, another shock to the system like that, we'll see premiums continue to normalize. When they'll be, back to February normal, it'll probably be into next year, realistically. And if, something crazy happens, if there's, a resurgence of COVID this winter, like some people are saying, if,
Yeah.
there's a contested election or something crazy happens with that, if equity markets continue this sell off and, go back into bear market territory, then honestly, it'll probably be the same thing all over again, just due to this supply chain can only handle so much. And when, investors flood in like this, there's just not enough to go around.
Yeah, yeah, okay, I agree. That was something that we saw there, saw happen. But with that supply, from where you sit and from what you see, how is supply relative to gold, silver, platinum, palladium? Are these generally all okay right now, or still a bit fragmented in some ways?
So gold is pretty solid right now. Gold tends to be the last one to fall. There's just the most of it out there. There's the most production capacity. The other thing is, gold per ounce obviously costs a lot more. So in terms of, your revenues going up drastically, you're having to make less incremental ounces of gold versus silver to satisfy that demand. Silver's still a little tough.
Mhm.
We're starting to be able to purchase some product that's in our industry, it's called live. So it means it's actually on a shelf. It can ship right now. In normal times, everything's pretty much live, and you're, able to just call a supplier. Hey, what do you have? We'll take that, and they ship it to you. Pretty much since March, every piece of silver we've bought has been on at least a 2 to 4 week delay. So, and some stuff we booked in March and April was 10 to 12 weeks out before we'd receive
Wow.
it. So it's starting to catch up, but it's still, silver's still a little tricky, and that's why you see the premiums are still a bit elevated on silver. Platinum's all right. The problem more so with platinum and palladium is that the mints that produce this stuff, gold and silver are just so much more popular, so they tend to focus their resources on those, those products. And like copper, as an example, we typically sell copper, but nobody's making that stuff right now, just because it's there's enough demand for silver and gold that's where they focus their resources.
Okay, okay, that's some good input there. Let me just scroll through these questions real quick. Okay,
Yeah.
and as far as price or product, you just mentioned how silver is still a bit sketchy. Should we should as a buyer, should we be waiting to buy on the dip, or should we simply buy what's available today?
So I'm a big advocate of dollar cost averaging. So basically taking this philosophy of, I want to put X dollars into precious metals over the next 2 years and splitting up those purchases, periodically over time. So you sort of get the blend of prices throughout that run. I think anybody trying to really time the market by, diving in at an inflection point, it's very difficult to do. We're normal people. We don't have, access to what's happening behind the scenes, and we don't have advanced knowledge of that stuff. So trying to figure out where markets are going to head, that's very difficult. And I think that if you concentrate, your entire investment into one price point, if it goes up a ton, that's fantastic, but you've also, fully concentrated your risk to the downside as well. So I would say, buy frequently, and buy, in smaller amounts so you can, dollar cost average in over time. The only caveat I would add to that is if you're, sort of in between, hey, can I hit a quantity discount? Like at JM, we offer, tiered discounts. If they purchase certain quantities, they get the cheaper rate. If you're kind of in between those, then it probably makes sense to take the step up and get the cheaper premium.
Okay, dollar cost average. Yeah, average down if we can. Good point. Another question frequently asked: generic rounds versus coins. Coins would be defined as a round with a legal tender value on it. For investment purposes, would one be preferred over the other, and why?
I think it's largely personal preference. So you're going to pay a higher premium to get into a silver eagle, as an example. In a normal market, you might be paying $3 retail for a silver eagle, roughly depending on your payment method quantity. You might be paying, a dollar for a silver round over spot. But when you go to resell those, the silver eagle is going to retain a lot of that premium. So, our bid in a normal market might be somewhere around $1.25 or $1.50 over spot for a silver eagle, whereas our bid in a normal market for a silver round will be somewhere closer to spot. So even though you're going in for more premium on the silver eagle up front,
Yeah.
when you look at the whole round trip, it's not really that different. So I think, you can't really go wrong with one or the other. Where I'd be a bit more cautious is some coins can carry much bigger premiums, or you get more into collectible territory. And there's nothing wrong with those products. They're beautiful. They're, something you can have, you can look at, you can pass down. But if you're viewing it purely as an investment, that's where you probably want to stick with stuff that's a little closer to spot. It just really reduces your risk.
Okay, that's a good point again. Um, Another question people have, this is right on the tails of rounds and coins. Should we be looking at bars or coins?
And I would give you honestly the same answer. So in my mind, rounds and bars are exactly the same thing, and that they're produced by a private mint. There's no face value. They tend to be lower premium. So rounds versus bars, I mean, sometimes you'll find cooler designs in rounds at the same, premium. So if you can do
Yeah.
that, that's great. It's more fun to look at. But rounds and bars in our mind, same thing.
Okay. Um, what is your, I mean, I know you've seen a lot of product move lately, but within that, what are you seeing people buying the most? What trend do you see, if any?
Yeah. So it's a similar mix of products as it has been historically. Silver Eagles and Gold Eagles are pretty much always reliably the top sellers for us. We only sell within the United States, so that makes sense. People prefer an American-made, U.S. mint product. Beyond those, it's small format silver and gold bars or rounds. So it's 1 ounce silver rounds. The cheaper ones from Silvertown or Sunshine. Those tend to be the biggest movers. 10-ounce silver bars from Silvertown or Sunshine, those also are very popular items. On the gold side, it's even down to a 1 gram gold bar from the Perth Mint, 5 gram, 10 gram, 20 gram, 1 ounce. There's a wide breadth of different sizes of gold bars.
Yeah.
We don't really sell many gold rounds. Those aren't really nearly as popular as silver rounds are in the market. So it's gold bars, cheap premiums, close to spot. Silver rounds and smaller format silver bars tends to be the biggest movers next to, the U.S. Mint products. Those are
Yeah.
always the headline items.
Okay. What's the word with U.S. Mint? Are you guys still okay with supply? Or I know they're allocating a bit more. They're taking it's not necessarily a pre-order, but they want to know from the buyers what are they going to buy, and then they will make those products. What are you hearing from the U.S. Mint?
Yeah. So they've definitely uh, boosted their production the last probably month or two. We've noticed that they're getting the allocations are larger each week. They're getting more coins out to the market. It's still not enough to get off allocation and fully satisfy demand, but they're doing much better than they were. March April timeframe. They actually had West Point closed down for a little while due to a COVID concern. I think a security guard there may have had it. When they were closed, they tried to make stuff at San Francisco, and they just don't have the capacity there. So that's where you saw Silver Eagles go to $10 plus premiums because there's only one supplier of those coins, and if they're not producing, there's nowhere to come from. So they are catching up now. They'll have a difficult time probably the next month or two deciding when to cut over to the 2021s. Typically, they start producing the 2021 coins early in Q4 and then make their first deliveries to the distributors in kind of the second week of January. This year, they're going to have to be a little careful because if they cut off too early, and they could run the risk of running out of 2020 coins for weeks or even 2 months, depending on what happens in early November. So they're going to have a tough decision to make as to when they cut over and kind of what mix they're going to do between 20s and 21s. But for now, 2020 Silver Eagles are in much better shape than they were a few months ago. Still not enough to get off allocation, though.
Yeah, if I understand correctly, the 2020 Silver Eagles, they had to move manufacturing over to Philadelphia, and now this is somewhat of a collectible item. Could you tell us a bit on that?
Yeah. I'm sorry, I said San Francisco. It was Philadelphia.
Oh,
Yes.
okay.
So they put out some coins from Philadelphia, and this has happened once before, where so Bullion Silver Eagles don't have mint marks on them. There's no way to distinguish where an individual Silver Eagle came from in the bullion finish. But the monster boxes, the mint straps, have specific serial numbers on them, which tell you which mint they came from. So dealers who were able to source sealed boxes of the Philadelphia coins, they could either sell them as sealed boxes, which traded for really, really high premiums because they're extremely rare, as you pointed out, or they would send them into a grading agency like NGC or PCGS. And if they had the right mint strap on them, they would put them in a slab that said Philadelphia on it. And those also traded at really, really high premiums. So we actually didn't get any of those boxes directly. We sourced some of those coins from some of our suppliers and sold them to customers who wanted them. But you're absolutely right. That's a pure collector piece. There were, it's an ounce of silver trading for hundreds of dollars. So that's a collector item. And, I wouldn't necessarily recommend it as like a bullion investment.
Yeah, that coin definitely has the values in the historic significance more than the silver. That's for sure. Okay,
Definitely.
can you tell us about your IRA programs and the products that JM Bullion has that are approved for IRA purchases?
Yeah. So a lot of people who aren't in our space don't realize that you can put physical precious metals into an IRA, a self-directed IRA. So how it works with us and really with any other dealer in the space is there are 3 parties involved with any transaction. There's the IRA custodian, and that's where the customer basically holds their funds. They ensure compliance with all the IRS stuff. There is the dealer, which in this case would be JM, and there's a depository. So for IRAs, you can't keep possession of the metal. You have to store it with an approved depository. In terms of what products you can put into it, the actual laws on this are pretty simple. There's just a minimum purity requirement with a few other items that are included, like American Gold Eagles. So like for gold, it's 995 minimum fineness. For silver, it's 999. That being said, some of the depositories are a little more strict with what they'll accept for an IRA contribution. So like certain depositories will recommend to customers, hey, we know these guys, they're a little more picky. We would put you into either American Silver Eagles, which are accepted everywhere, or, Sunshine Silver Bars, which are very widely known, Johnson Matthey, some of the more recognizable names that won't have any risk whatsoever of a depository rejecting them. But by the letter of the law, it's just that minimum purity requirement is what makes something IRA eligible.
Okay. Are you seeing an increase in IRA accounts opening up?
Yeah, we've seen a really big increase this year. IRAs tend to be about 25 times bigger than a normal order for us at JM. So, it makes sense. It's somebody's retirement account. They're making a fairly large transaction. but we've seen an increase in both the size of the IRA purchases and as well as the frequency of IRA purchases this year. So it's largely mirrored what we're seeing in the market as a whole.
Okay. And do you exclusively work with one company to manage the accounts, or do you have a few various companies that will come to you and recommend a client to purchase from you?
Yeah, so we can work with any custodian. If a customer comes to us and says, "Hey, I want to do one of these. I'm not set up with anyone," we have a few custodians that we have very close relationships with, and we'll tend to recommend them to, one of those because we know them well. We know they're going to have a good experience, and we've really got the process down pat as far as getting the metal into that account for them.
Okay. Okay, great. Um, can you tell us about your shipping and your return policy? And I think this it's a simple question, but it's fairly significant because I know there are a lot of moving parts when it comes to shippings and returns. So could you give us some insight on that?
Yeah. So JM and Provident were at free shipping over $199. Um, we basically found several years ago that customers just prefer free shipping in general. So we made the move towards that. We were the first in the space to really do that across the board. Pretty much everybody's followed us now, so it's sort of become standard in the industry. We aim to ship everything as quickly as we possibly can. In a normal market, that's almost always the same day of cleared payment. So, tomorrow morning, if you bought from us with a credit card at 8 a.m., your order would ship that day unless there was some sort of issue, verifying the credit card charge. And for a paper check, or an ACH, it's basically once those funds clear. Obviously, we have to protect ourselves against checks bouncing and things of that nature. So typically, we're shipping same day of cleared payment. Right now, that's where we are. There's been a few periods this year where the demand has been so overwhelming that we literally just couldn't get metals in the box fast enough, and we were falling behind. So we posted on our website, we had some brief shipping delays where we told customers, "Hey, we're just so busy that, we'll let you lock in a price now, but the expectation is this won't ship for a week or two," which people were very understanding of. In regards to returns, so if we mess something up, that return is completely on us. We'll give you a prepaid label. We usually will provide the customer with something special for our mistake, and we'll make it right. Fortunately, that's fairly rare. If the customer just decides, "Hey, I just don't want this," or "I don't like it," or metals have gone down, they can return it to us, but we are going to require them to pay any market loss fees if they apply. So what a market loss fee is if you bought from us tomorrow and silver's at spot 23, and by the time you receive it in a few days, spot's down to 15, and you say, "Well, I'm down. I just don't want it anymore. I want my money back." Someone's taking that loss. You purchased it. As soon as you buy it, we unhedge that metal. So for us to take it back at $13, we would actually be eating that entire loss. So in that case, the customer would have to pay that difference if they wanted to return it. The example we always use with customers, if they're confused on that policy or why it happens, is, like I said, as soon as they buy from us, we unhedge it, and they own that spot price, and that's their metal. So the flip side of that is if you buy from us tomorrow and spot's at 20 and then it goes to 30 the next day, no company is going to call you and ask you for more money. So it's essentially just the opposite of that, right? Like, when you buy it, we're locking in a price. We're agreeing to honor that price for you. You're agreeing to purchase that metal from us.
Okay. Yeah, gold and silver people, we're honest people. We don't do that much.
Yeah.
So okay.
It's extremely rare that comes up, thankfully.
Yeah, amen to that. Um, Are there any new things JM Bullion is working on that you'd like us to know, or is there anything else about JM Bullion that you'd like us to know? And I understand you do have an app that's pretty good.
Yeah, so we have an app on JM that you can sign up. You can monitor spot prices, watch live streaming gold price charts. You can also set up for spot price alerts. So if you have a price you want to see, "Hey, I want to get into silver if it happens to fall below 20," or let me know when gold hits 2,000. You can set that up in the app, and it'll give you a push notice for that. One thing we are working on that will be coming probably early next year, we're actually opening a brand new distribution center in the Dallas area. This is really exciting. Our capacity for inventory, for shipping orders, for being able to have customers store metal with us, store IRAs with us. So it's going to really expand our capabilities. And and just give us more control over our supply chain and the experience customers have when they open that package from us.
Yeah.
So we're very excited about that. That'll probably be open in Q1 next year. And a nice thing about being in Dallas is we're centrally located in the country. So whether a customer's in California or New York, we can get that metal to them. One of, if not our biggest state. So, customers who are in Texas will be able to get next day delivery out of that new distribution center.
Okay. And so the construction, everything is still on schedule despite all of the pandemic issues?
Yeah. So that's actually gone surprisingly well. Everything's looking good on that, and we're really excited to start hiring to staff that thing up and get it off the ground.
Okay. Mike Wittmeyer, we appreciate you coming on. Is there anything else you'd like people to know? Maybe, I guess everybody's familiar with your website, right? jmbullion.com. And
Yeah. So we're at jmbullion.com. I saw in the comments here, we have some customers, so appreciate you. Thank you so much for having me on.
okay, no, we're thankful that you came on, and we definitely wish you all the best, and we'll be looking forward to see how things go.
Thank you very much.
Okay, thanks, Mike. Take care. Okay, so that was JM Bullion CEO Mike Wittmeyer. Sorry about that. Just need to scroll back here. Yeah, some pretty interesting things to say. Seems like JM is handling things very good, continuing to grow. Like other companies, they did see delays in product. Premiums did go up across the board. Every company had to go up in premiums a bit. So appreciate Mike coming on. I think he has a pretty interesting history when he first started doing affiliate affiliations anyway with the online poker websites. So, with that, I want to move forward. I guess we still have a little bit more time. So what I want to do is go back and again take a look at some things Peter Schiff said, and I want to add on it with a few things that Tavi Costa had said in his recent release on his YouTube channel. So let me just see where I'm at here. To follow up on what Peter Schiff was saying, Tavi Costa, he did share some great information on his YouTube channel, and I want to share that with you guys. It's pretty interesting stuff.
Here, S&P 500 versus money supply, since we've had these issues with regarding the amount of not only stimulus and the monetary part of things, but also with the lack of discipline from the central banks and governments in general. What we've seen actually is that equity markets have been, especially in terms of valuations, I can go through valuations and look at different fundamental metrics that we can see. But I think the most important part of this chart is to see that also equities are not only overvalued relative to their fundamentals, but also overvalued relative to money supply. Very different story when you look at precious metals. And I'll look at this charts in a minute here. But you can see that this chart actually almost shows like a double top, and it touched the other line of back in the tech bubble periods when we were at a very extreme. And I think that this is a very overvalued market in general, and why I think the markets or investors will start looking at precious metals as an alternative. Another way of seeing this is just looking at.
Okay, so even Tavi Costa is pointing out how we definitely are having some overvalued markets right now. Incredible valuations, gains, and charts showing this, and the gold price showing and confirming we do have inflation. And again, this is something gold is screaming at right now. We do have it. It's just that it's in a place where it seems to be contained somewhat. I know a lot of people are seeing it now in food prices and other things, but it's in a place where generally Main Street does not venture into. And we're going to see incredible opportunities that are going to come out ahead if we understand this game and we do understand what gold truly is. And we're thankful that we had the CEO from JM Bullion come on and help us out with this. Let's keep our heads in the game. That's what it's about right now. Let's keep our heads in the game. Stay cool. Definitely need to stay cool because prices are very, very volatile right now. Gold and silver will come in. It's going to come in off the bench in relief, bottom of the ninth, in the clutch. It's going to get the win, and it's going to be epic. So I want to play something else that Peter Schiff had said in our interview last week.
Well, I mean, it's hard to say that it's the Fed and inflation that is to blame for everything, but it's certainly a very large contributing factor. But obviously, it takes, two to tango. And so the Fed has had a lot of help from the government in general, Congress and the president. They have passed a lot of laws. Now, you can argue that a lot of this spending might not have taken place, but for the willingness of the Fed to finance it, to monetize it, to artificially restrain interest rates. So the Fed has done its part. But of course, Congress didn't have to act so recklessly and irresponsibly. Just because the Fed was pouring alcohol, they didn't have to drink it.
Okay, and that is true. It reminds me of and I'm sure it reminds me of you guys as well, where you may have some law back home where the bartender is supposed to cut off the patron if he sees that the patron has had a bit too much alcohol. But Powell seems like he's that bartender that's just going to continue giving you everything on that drink list, and Congress is just going to take it all in, and we're going to be the ones that are going to pick up the tab. Um, but with Mike Wittmeyer over at JM Bullion, I'm pretty impressed where he's a younger guy who has got it all together. I believe he has a partner named John, and that's where JM comes to be, JM Bullion. And I don't mean to go back and forth between last week's interview and between JM Bullion, but it is interesting how they did pick up Provident, and they are carrying out actually quite a very good supply, a variance of coins and such. And I'm looking at the comments here, and it seems like quite a few of you have had dealings with JM Bullion, and it does look to be favorable. In the States, are you folks seeing also the higher premiums on the Eagles compared to the Maples? Because that's what we see here in Singapore as well. So I'm kind of curious what you're seeing there in the States. Because all around the world, the premiums on Silver Eagles are pretty high. And if any of you guys are going to get that special premium Philadelphia Mint Silver Eagle, so just want to see what some of your posts here are, some of your comments. Let's see. Okay. Jeff 702 Powell's hanging out at the punch bowl all day. Yeah, it's kind of where it is right now. So sometimes we talk about, how they put the punch bowl in front of Wall Street, and now it's being placed in front of Main Street. So just wondering if we'll ever be able to get off of it. Manuel De Jesus, Eagles do cost more. Yeah, we see that as well, but I'm wondering how much more is it in the States? Mainly because, you don't necessarily have to deal with as much shipping and whatnot in the States. Whereas, when it comes over into Asia, I think we do see a little bit more of a premium. And, so much so that we see guys moving into things like Canadian Maples instead of things like Silver Eagles. They're moving to Maples, moving to Perth Mint items. So it's kind of interesting how, depending on where you are in the world, the more popular coin can be different a lot of times. So let me see. Rusty Shackelford, I have a very high opinion of Provident. I've been a regular customer, and they clear my e-checks a day after I make the order. I couldn't recommend them enough. Okay, it's always nice to see how things are happening in the rest of the world. Saint Longinus, 2841 Silver Eagles. So, yeah, it's a couple dollars over spot. Okay, that is still I guess it is what it is for now, right? I mean that's just where it is. Let me see what else is out there. Okay, so I'm glad that Mike had the time to come and talk with us, and I don't want to spoil the interview we had with him because it goes on record, historical record. If somebody wants to see the interview with Mike, then they'll come back and click on it. So as much as there are other things that we could add on to and talk about. I think maybe we should keep Mike's interview as Mike's interview. So with that, I'll be ending this live stream, and I do hope you folks take the time to especially download the app. The JM Bullion app is pretty good. I've downloaded it, and it has alerts and things like that. So it's a pretty good app to get. So with that, let me see if there's any other good comments here that I'll pick up on. If not, I may be ending this live stream so we can keep Mike's interview as being Mike's interview. Okay, so let's see. Okay, so I think we'll end it here. I may bring back the whole Peter Schiff, Tavi Costa thing a little bit later, because I want to keep that separate, and along with G. Edward Griffin's interview. We'll take a look at those three things together: G. Edward Griffin, Peter Schiff, and some things Tavi Costa had to say. So again, I thank you all for being here. Just really pay attention to what's going on. And again, there's some very, very good options that are going to come our way, and it's good to know that there are companies out there, JM Bullion, silverbullion.com.sg over here in Singapore. There are a lot of companies that we're looking out for you in a lot of ways. So we do hope you stick with us, and we'll be doing our best for you. So having said all that, just silver up. Make sure you silver up. Saddle up for what's coming ahead and silver up. And we'll see you guys next week. You all take care.